What is up, everybody? Logan here again with another small account challenge video coming right at you with Vance today. And I got my little Job of the Hutt background here for any Star Wars fans. But we had our biggest week last week out of the small account challenge. If you guys want to come follow along, the link is down in the description. Also, leave a like and a comment on this video. But last week we made $217.11. That's after fees and commissions. We had a couple plays work out really well for us. And we even had a little bit of a sweat on Friday, but we were able to close that trade out. And we just opened a new trade into tomorrow because our plan is to try to make a little bit of money this week as we battle Powell on Friday. And we have the rate hike and Powell on Wednesday as well. So today was a nice trading day. I expect tomorrow to be a good one. But thanks again for coming on for another video, Vance.
No, not a problem. So yeah, like you said, Logan, we had a really stellar week last week, which is actually really funny because I would be willing to bet that a lot of people got wrecked last week between the price action of Tuesday and Friday, which was pretty devastating for a lot of people because there were a lot of people I think who were probably playing bounce trades on Tuesday, figuring, hey, we've hit the limit of where we're going to go. And it's not going to go down any further, and it just kept falling like a knife. So it was pretty crazy. But overall, I think we did pretty good. Like you said, we did 4.15% on the week, which is spectacular, really. $217, and we're well on pace to make the goal right now, which is what's awesome.
Oh yeah, that's my favorite part so far is that we're completely on pace, even with quad witching Friday, last week's Tuesday's price action. We've Powell this week, so we're probably going to play it smaller, but it all comes down to what setups we have and our expected move math that we've been doing and all that combined. And I'm just pumped that the account value is almost up to $5,500 after 3 weeks. That is just perfect for what our goal is, right? By Christmas, take this 5K to 10K. And our average days in a trade has stayed small enough, right? Because we've had this market that's moving in 4 to 5 day increments where it's like red for 4 to 5 days. And then if it's going to turn around, it'll be green for 4 to 5 days. But it's just what we've seen. And then anytime we start to consolidate, generally is when the next big move is going to happen that we see around the FOMC or CPI days.
Yep, absolutely. And FOMC is Wednesday, and that's going to be a very big kind of inflection point for the market. 5 years ago, no one cared about these days. They didn't have the relevance they do today. But with the market we're in, and with the inflation and other issues we're dealing with, it's definitely a market moving day, and a lot of people are going to be putting eyes on it and what Powell says after the meeting in the press conference. So yeah, it's gonna be one of those days where, if you're gonna do zero DTE, you probably, if you either want to get in first thing in the morning and go really wide to try to get in while the EM is high, or you just set it out, which is a valid argument to make because, either the market's going to like or dislike what is said, and it's going to probably be a big moving day either way. So sometimes sitting on your hands is the safest strategy.
Yeah, absolutely. And last week too, we had a couple call credit spreads that we did where we had that roll, and then we end up getting out of those right on Tuesday because of that big move. We rolled those 2 Friday, and that just made sense to let some of them go. Other ones we closed for a super small debit. So everything overall is looking really good. You guys can see some of the rolls in these trades, but these are all the trades, the return on collateral that we got on them. And, we did at one point have $1,000 at risk, and it's totally cool because that is still right at our risk parameter that we didn't want to exceed over 50% of the account at risk at one time. And granted, a lot of the risk that we are taking is super far out of the money, so we already have the odds in our favor, and we're just being very smart about sizing and timing, which is probably the biggest reason that we've been successful so far. And we started tracking this basically the first day of September, second day, like first, second day of September, right around then. So everything so far has just been smooth enough in the process to where we're able to focus on the long term. And I can already see most people who are trading with us and myself, like mentally becoming more relaxed, because when the process works out, right? Because you have this goal, because that's what I always think with goal setting is when you first set a goal, it's so easy to wish you were at the end already, like at the 10K, because the start of a goal is like the scariest part, right? Is like when you start one, because there's so many different factors. What if this doesn't work out? You're doubting yourself, whatever. But then you see it formulate, it comes to life. You know, we're 14-0 on this. So far looking really good. And we're on pace, plan to keep this pace up. And I just know I'll feel even better once we hit that 6K mark, get to that 7K mark, and then we can start running a bit more aggressive. But one thing is, we did take SPX today. And the reason I did that was just because SPY doesn't have an expiration for Tuesday, which is tomorrow. And I don't want to swing anything into Wednesday just because of the FOMC and rate hikes. And I just don't want any irrational movement after that comes out to screw with the challenge, because you know, no reason to put ourselves at risk for that. So we'll see what we can get out of tomorrow's trade at 38.25, 38.20. Opened it for 45 credit and see if we can get some good zero DTE play tomorrow. But that is pretty much my plan for this week. And maybe on Thursday we can see some decent follow through to set a trade up for Friday. But Powell even comes up Friday again. So it comes down to this price action and where it wants to take us. Because last week was wild. We had a bounce back day today. I expect another green day tomorrow. And then who knows what will happen on Wednesday.
Yeah, Wednesday is going to be a crazy one, almost for sure.
Yeah, there's a lot going into it as well, because you know, maybe it's 75 basis points because that's what's expected. But also at the same time, it could be a point, like a full percentage point, because this inflation's not calming down and it's only getting scarier. And it's like, if this is all they can do is raise interest rates to force the economy down, I mean, that's not
Yeah.
that's not
Yeah, for sure. Yeah, I think that CPI last week really threw a monkey wrench into it, because it's kind of soft told everybody that whatever's happening right now hasn't been enough. And so really, I think the plan was to continue doing a 0.75 basis in perpetuity until everything really was under control. And again, there was this belief that it was, and then last week showed that it wasn't. It was, you know, the CPI before that was a smoke and mirrors. It looked better than it was. So a few months ago, there was a big concern they were going to do a 1 point hike. And I think that that's going to be the concern again, is that the Fed's going to overreact and do a 1 point basis hike. And I honestly think that that's going to be the trigger. I think if we get the 1 point basis hike, the market's going to react very negatively to that, and it's just going to tank. And I think that if we get the 0.75, which is the expectation, that'll put some degree of confidence that, you know, the Fed is staying the course. Things aren't necessarily good, but they're not overreacting. And I think that will cause the market to probably go up at least Wednesday. After Wednesday, you know, it's subject to the whims of whatever, but I think that's going to be the trigger for Wednesday. And right now, probably more than it has been in the past few years. It just, every day is so news based, you know, and it's pretty incredible how, you know, what somebody says can affect the market the way it does. But that's why we get these swings, and it's almost the reality of how it is now.
Yeah, and I think that's the other thing too, is what I do like about these swings though is the VIX has been up, so it's enough to give us good opportunity throughout the whole year, pretty much. Like,
Absolutely.
to feel like you're getting a really good credit with the good amount of risk that you're putting on, and you're not having to play like super close to the money because the VIX is 18, right? Like we've been steady 25 throughout this whole year. Sometimes we're 30, sometimes we're 20, and then occasionally we're 35, right? Like when it's nasty out in the streets, like 3% day left and right, followed by a 2% or whatever. But we've been steady around that 25 mark, and that's one of my favorite points because it's a nice point to base your trades off of, because anytime we break past and over 25, expect more, volatility increase. And then if it's underneath 25, you can expect it to try to go back to 20 and try to get back on some sort of bull run. But just
Yep.
the economy right now is just so brutal. But even FedEx came out after their earnings missed and said that they're, looking like it's getting closer to a recession every day. And,
Yep.
all the signs kind of point to it right now, but I'm also not, I'm the type of person that I'm really so tuned into reality with this stuff that I don't really believe recession until we see it 100%. And yeah, we can see signs of stuff, but think about how many times we saw oh, we're coming out of this bear market, like at least
Right.
3 times out of this
Yep.
bear market where we got the bull market rallies. So it's like, even when we were at 430 on SPY, I knew it wasn't going to last. And,
Yep.
maybe we go back to 3,600. I could see that being a possibility, maybe 3,400, 3,200. But I also, I day trade. We do short swing trades. So either way,
Yep.
I'm cool with it. So,
And I think that's the best mentality to have, is that, one of the nice things about trading shorter days to expiration and about trading the, 0, 2, 3, 5, things like that, is that you can actually be less concerned about the individual daily market moves. There's this mentality that if you trade, a 45 or a 60-day out, like, you actually can be less concerned. But I think really, in kind of a weird sort of way, you have to be more concerned, because even though you're longer data expiration, right, you're almost more affected by these massive swings that are occurring, because a lot of times with those longer trades, you're trying to become directionally neutral, right? You'll put on a big iron condor that's, 300 points out, maybe 20 points wide. And the idea is that, it's going to stay within a range, but then it gets so swingy, that it's very easy for one side to get breached, and then it will come back and breach the other side. And by trying to get too crafty and too creative, you become more at risk than by doing a shorter term, and then you can almost pick a direction, or you can pick a direction but also stay far enough away that it can go against you. But if it's not a big enough swing against you, you'll still be fine. And I think that's more advantageous to a lot of people. The reality of it is that even in a bear market, right, a put credit spread on any given random day has a better chance of winning than a call credit spread. That's just the math of it, right? Historically, that's how it works. So if you go out there and you at open go down 30 or 40 points and put on a put credit spread from open, you just mathematically, from just a coin flip standpoint, have a better chance of winning. If you try to make a non-directional play, you have a much greater chance of getting busted out, because the market's going to probably move in a direction. And if it moves bigly, either up or down, you get rolled over. So, there's definitely reasons to trade longer term. There's definitely advantages and reasons to trade shorter term. And I think that, one of the things that we're doing here with this is we're trading a little bit shorter. Like the metric said, we're only in trades on average about 2.5 days from entry to exit, whether it expires organically on the day of expiration or we're closing early, which gives a little bit of an advantage, because we can take that shorter term volatility, right? And when it comes off and it peels off, we can get out of a trade. If we get the volatility reduction and directional movement, we can get out even faster. So that's one of the reasons why being directionally neutral sometimes is not as good of a deal, because then you lose that ability to take the advantage of a directional move. You basically have to deal with volatility and theta decay, and that's it.
yep, that's it. Yeah, and that's the other thing too, is like I've always liked shorter term because the theta burn off is a lot more aggressive. So even if you're, in a trade for 3 days and you get in day one, you get the direction right and overnight theta burn,
Yep.
that's enough to where you could be at a 60-70% credit collected already,
Yep.
depending on
Absolutely.
how far away you are from the money, right? And like what your initial trade was. But yeah, I 100% agree. And that's why I don't even mess with any, like the longest expiration I mess with, unless I'm selling covered calls. Sometimes I'll go 30 to 45 days, but 21 days, like, and even with credit spreads, I try to go even shorter, especially in this market, just because the swings are so wild.
Yep.
You get a max profit one day and a max loss the next,
Yep.
could have happened to anybody listening to this on Tuesday last week, just because that's the nature of this market. It has been a beast. But is that everything you wanted to touch on in this video?
It was indeed, sir.
Awesome. Well, that's going to be everything for us in this one. I do appreciate you coming back on, Vance, like I said earlier. And I'm excited to continue the challenge. I'm excited for everything that we got going on. Hit another good 0 DTE today, too. Put me at 49 for my last 50. And it was a great day with the Discord. Nice, smooth market day. Rarely do we see these anymore. But like I said, if you guys want to come join with us, there is a 1-day free trial to the Discord below. You guys can come check it out, see if it's for you. And let's continue this challenge. And after this challenge is done, we are going to start the 10K to 25K challenge around New Year's. And Vance and I, once we get there, we'll think about like, okay, what are the parameters for that? How long is that going to take us? And we'll be teaching strategies with our seminars and all that, how we pick our strikes and have the high success win rate that we've had. So that's going to be everything for us in this video. I appreciate all the support, and we will see you guys in the next one.